Few weeks, we've seen some pretty robust market action in China and Hong Kong, suggesting that the happy days may be here again. What say you?
Well, I think the happy days may be here again for a period of time. I mean, China is the standout at the moment, but very much on a tactical basis. If you look at how other markets recovered in, say, the second quarter of 2020, after they had a very difficult first quarter with the lockdowns. I think China's at that stage now. We've had a very difficult quarter, of course, with the lockdowns in China. We've had a dramatic turnaround in policy on that basis. All of a sudden, things are completely open. And we're in a situation where we'd like to see the same rebounds in China as we've seen in other markets. And don't forget that in parts of Europe, in the US, we had GDP rebounds in the order of 20 or 30%. So I think that is likely to come through.
So you're saying it's a dead cat bounce then?
Yeah, I think a bit more than a dead cat bounce, because remember, before then we had the policy issues with companies like Tencent and the crackdown on the tech sector and a lot of the billionaires. That really shocked the market, because then it meant that it was then very difficult to look at things like earnings, things like price earnings ratios, things like cash flow. It's much more difficult to look at fundamentals if there are the strong policy moves in China. So we had that first. Then we've had the lockdown situation, which is, we've just seen the export figures out of Hong Kong down 30%, the lowest in 70 years. I mean, that's even older than I am. So we've seen these kind of hits. So I think that it's only obvious to say that we're likely to see a tactical bounce. It will be tactical because China, at the end of the day, has to fit in with the rest of the world. And if the rest of the world is, the economy is ho-hum, then China's unlikely to buck that once it's moved through its own particular move.